Hey.
Magnificent.
Hey.
Magnificent.
Hey.
Magnificent.
Hey.
Magnificent.
Hey.
Magnificent.
Hey.
Magnificent.
Hey. Wall Street, the center of global finance. But did you know it all started with a literal wooden wall? In the last episode, we covered how in 1602, Amsterdam gave birth to the stock market as we know it today. From there, the stock exchange found its way to London, but instead of being orderly, centralized, and structured like the bourse, trading spilled into loud, smoky coffee houses. Jonathan's Coffee House became the beating heart of London's financial world. And that's the version of finance that crossed the Atlantic and landed in New York. Not the orderly bourse version, and while it was taking place, New York was still the Dutch colony of New Amsterdam. They were surrounded by enemies, so settlers built a defensive wall along the northern edge of their tiny outpost to protect themselves. The wall stayed up for a few decades before the English arrived and tore it down, but the street running beside it kept the Dutch name Walstraat, which later became Americanized into Wall Street. By the late 1700s, New York was still small and buzzing with commercial energy. But there was no real market. There was no standard unit of investment. Hamilton changed that. Yup, that Hamilton. Alexander Hamilton stepped into this chaos and proposed the federal government should consolidate all the state war debts. And in their place, the government would issue standardized federal bonds. And because these bonds traded, their price reflected real-time expectations about government stability, interest rates, and public confidence. They became the backbone of America's financial system. Then Hamilton added a second piece to his architecture, the Bank of the United States. And this wasn't just a bank. It was part central bank, part commercial bank, and part giant joint stock corporation. And the moment people realized they could borrow money to buy more bonds and bank shares, leverage appeared instantly, naturally, and dangerously. And nobody pushed leverage harder than William Duer. Duer was America's first true financial degenerate. He was charming, well-connected, politically powerful, and constantly borrowing money from anyone who would lend. And he hid the skill of his borrowing behind a maze of partnerships where each partnership guaranteed the other's loans. Duer's plan was to corner the market on federal bonds and Bank of the United States shares. If he controlled enough supply, he could push prices higher and force buyers to come to him. And early in 1792, the Bank of the United States tightened lending, and when the biggest source of credit pulls back, the entire leverage system starts suffocating. Duer couldn't roll his loans, he started missing payments as lenders panicked, their lenders panicked, merchants began recalling credit from customers, forced selling hit the bond market, prices plunged, bank shares dropped, shops couldn't extend credit, wages didn't get paid, and New York experienced its first significant financial crisis. And Duer was at the center of all of it. So he was thrown into debtor's prison, literally a jail for unpaid debts, and crowds gathered outside chanting his name, furious at the economic damage he caused. So Hamilton stepped in like a one-man central bank. He ordered the Treasury to buy federal bonds on the open market, which stabilized prices. He privately encouraged the Bank of New York to keep lending and promised federal support. He purchased high-quality securities from banks that needed liquidity, injecting fresh cash into the system. Decades before the Federal Reserve existed, Hamilton behaved like it. Lender of last resort, stabilizer of markets. Brokers realized that you can't build a financial system on verbal promises, chaotic trading rooms, and random operators who might blow themselves up at any moment. They needed structure, so in May of 1792, 24 brokers gathered under a buttonwood tree on Wall Street and signed a simple agreement. They promised to trade only with each other, charge a uniform 0.25% commission, and agreed to meet on a consistent basis to maintain order. It worked on a small scale, but America didn't stay small. The biggest shift was the explosion of tradable corporate shares. If you wanted to build a canal in 1810, or a toll road, or a ferry service, or a water system for the city, it couldn't be funded by one person, and even banks were too small to fund it. So states created special corporate charters that allowed these massive public utility projects to raise money by selling shares to investors. By the 1810s, the heart of New York's financial world mirrored London's chaotic system, mostly taking place at the Tontine Coffee House, and to no surprise, it became unmanageable. Conflicts were constant. There was no clearinghouse or central ledger, every trade depended on reputation and memory. Even worse, traders formed a shadow market outside the Tontine. It was a peak stock exchange shit show. This financial ecosystem evolved far beyond anything the Buttonwood Agreement could handle, so the brokers did something bold. They wrote a constitution. Membership became formal and exclusive. You couldn't just walk in and start shouting. You needed approval, you needed reputation, and you could be expelled, which meant losing access to the best liquidity in America. Trading sessions became structured. Securities were called in a fixed order one by one with presiding officer managing the flow like a human trading bill. Settlement rules were codified. If you made a trade, you settled it on time. No excuses or disappearing. No settlement meant penalties, and repeated offenses meant expulsion. And the exchange reserved the right to invalidate trades deemed fraudulent. Listing became an official concept. Only approved securities would be called during trading sessions. The result was transformational. New York was known as a commercial port, but was now becoming the financial capital of the new nation. This was the true birth of Wall Street, the moment when New York's financial ecosystem went from chaotic adolescence to structured adulthood. Like, subscribe, follow at The Magnificent on Instagram and X, and let's keep the education going every Sunday at 11 a.m. Central.